Hey everyone, good afternoon, good morning, good day everybody. Thank you for joining my Forex class once again. You're welcome. And how has been the trading? So somebody demands this particular topics which I need to share today to everybody, and everyone need to be particular of this. So today we'll be talking about Forex itself. What what is Forex, and what the Forex market entails as a trader or as a beginner. Let me put it that way. So as a beginner, what are the things that we need to know as a beginner? What are the ups and downs that we need to know about Forex? So that's what we'll be discussing today. So one of our subscriber demand that they need to know what Forex is all about. So Forex market is is not like a a market that you buy goods or services. It's a financial market that a buyer and a seller they meet and they exchange their currency, say a dollar to another currency, say naira, as the case may be. So that's what Forex market entails. And what is Forex? Forex the rate at which a buyer is willing to pay in order to exchange his currency for another currency. Like for instance, they want to exchange your naira to dollar, so the more amount you pay to get such a dollar. So that's what the Forex is all about. And also is the rate of exchange, and is the rate of exchange that you pay when you want to acquire a currency, probably maybe for goods and services, to import goods or to export goods, as the case may be. So what do we do in forex market? In forex market we exchange currency. We trade currency, we trade commodities, we trade uh, other uh, 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 commodities like gold, silver, crude oil, and so on and so forth. So I will not bore you with uh, too much terms. So what are the requirements that you need for to engage in this forex market? You need a laptop or a smartphone, as the case may be. So you need a smartphone or a good laptop or computer system with a good internet, depending on your country of residence. You know the network that is more okay in your country of residence. And also need a good training strategy, which you have already tested on a demo account. You cannot just go to forex market and start trading without first demo trading your way before you go for a live account. So you have to first of all uh, practice your skill, your strategy. You have to practice on a demo before you go on a live account. And also, what do you need? Also, the requirement also, you need a starting capital. You need a starting capital. Maybe some broker, depending on the broker, some broker will give you leverage for you to start trading with 10,000 naira Nigerian currency. This is equivalent of, let's say, $10. That's approximately. Then some broker will give you, if you can have $5 in your account, you can start trading depending on the broker that you choose. You can start, at least for you to be able to be comfortable, at least start with minimum of 50,000 naira Nigerian money. Then you need to sign up with a forex broker, because these people are the people that give you access to this forex market. As you are seeing, all these the uh, the the pairs that we traded in the forex market, all those currency pairs that you are seeing on the chart now. In this video we can see so many currency pairs. These are the things that we traded on the forex market. Then you need a forex broker. As I said earlier, we have so many of them, like all forex, we have NS, we have STM, we have forex.com, we have Espro, we have OptaFS, and so on and so forth. So but as the case may be, FSTM and forex, hot forex, they are one of the best in Nigeria that I can recommend for anyone to open accounts with. So they are very good and they are reliable. Then how do you start trading? You start with a demo account. So as a new in this market, you don't just jump into forex market without demo trading your way with a demo account. And what do I mean by a demo account? These are the accounts that will be opening, that will be open with a broker, which will give you access to a demo amount. Let me say a demo amount, a virtual amount, say $5,000 for you to start trading. So it doesn't have any risk associated with it. It's free. You can just sign up with any broker of your likes and start trading with it, with your strategy. But you can't just trade without knowing those basic concepts that you need to know. So you can never trade on this forex market until you have already demo trade your way. That you have confidence that now you can now go for a live account. And what do I mean by a live account? Live account is an account that you open with money. You open it with your own money, with your real currency. It's not a virtual currency this time around. So it's a real currency. So then you go live to trade the forex market. Then how do you place your first trade? Before how to place a trade in market, there are orders. You have series of orders. You place a short order or you place a long order, which is long position or short position. What do I mean by long position? This implies that you are buying a currency pair. That, for instance, you are buying a dollar against USD, a dollar against Japanese yen. So dollar is your base and Japanese yen is the counter. So you are buying dollar against Japanese yen. So you are hoping that, for instance, now let's assume from the chart now, what you are seeing on this chart presently now, you have euro JPY on a present market price of 158.14. that is 158.14. that is the present this rate now is changing. So it's changing intermittently. So 158.13 now is now 158.13. It's changing. So for instance, now if I want to place a buy order on this particular pair now, I will predict that this market is going to go to 158.20 from 158.15. So I'm predicting that it will go up by 5 to 20. So that's a buy order. Then also when we are talking about a short order, which is a sell order, that is, we are saying that you are predicting that the market is going to fall, but from 158 is going to drop to probably maybe 158.00. I don't know whether you understand what I'm talking about here. So that is presently from this currency pair that we are looking at, which is euro JPY, 158.14 presently is now changing, that is going to be 158.00. So that is, the price is going to fall down to 00. So that's a sell order. Then also we have close the trade. So how do you close trade? Closing trade means whether you are making profit or you make a loss. But at one point in time, you exist the market. You are going to leave the market depending on the movement of a pair. For instance, from what I said earlier, that I want to go long, I want to go and buy this euro JPY. I'm predicting that the market is going to go to 158.20, but presently the market is 158.15. So when the price gets to 158.20, I'm going to be off the market. That is, I'll make profit of 5 pips, which is, for instance, if I'm going uh for a for a buy order, I'm going to make a profit of 5 pips from that market. And also, if I'm saying that I want to exit the market while selling the market, which is a short positioning, that is, I'm saying that the price is going to jump to 158.00, so I'm going to make a profit from this sell position of $5 also. Sorry, not $5, this 158.15. So I'm going to make a profit of $15. 15 pips, sorry, 15 pips from this market. So I'm going to exist the market. So it can either be a loss, and also it can be a profit. And how will you make loss? That is, if I said the market is going to go for a long position, that is for a buy position, the market is going to go up to 158.20. Peradventure the market now go to 158.00. That means I've make a loss from that particular trade. So that's what I'm trying to explain here. For my previous video, I'll be able to share how to take profit and how to make how to set a take profit and how to take to set a stop loss. So if you go through our previous video, you'll be able to understand what we are talking about here. Then we are going to discuss forex trading strategy. There are many strategies that you can use as a forex trader. There are many strategies that you can use as a forex trader, but the key ones are technical analysis and fundamental analysis. Technical analysis and fundamental analysis. And what do I mean by technical analysis? Technical analysis involves the study of charts, patterns. The study of charts patterns. As an example here, like this, what I'm doing presently, that is, I'm studying this chart pattern. And what do I mean by chart pattern? All these tick that we are seeing on this particular chart is what we call chart pattern. Let me put an indicator there so that you understand what I'm talking about here. All this that you are seeing here is a chart. They are what creates chart pattern. You can see all those things that I'm touching. This red, this green, all those are chart patterns. They are what creates the chart pattern for technical analysis. You can all see it on the chart here. You can see on the chart here. So these are what creates chart pattern, or you can call currency trend. You can use trend also for our analysis as well. So you can use trend. Now what do I mean by trend? That is either a uptrend or a downtrend. You can generate either a uptrend or a downtrend. So from the chart, so it can be either a trend, or also we have so many chart many analysis that we can generate with technical analysis. Some use price action strategy, some use chart pattern, some use support and resistance, and so on and so forth, for them to do their analysis on this market. Then the second one is fundamental analysis. Fundamental analysis. What fundamental analysis states is that fundamental analysis is mainly related to trading based on the news events like GDP, GDP of a country, or job data. That is when there is an unemployment news, like what happened last week, when the news comes up about unemployment in US. That was a move of the market, so the market reacts based on the news happen in that particular currency pair, or the GDP of the nation, or probably maybe there is a major event that has either positive or negative effect on a particular country, so it's going to have effect on that currency pair. So also trader also some trader use fundamental analysis to do their trading also. Then what strategy can we now use as a technical analysis? What strategy can we use? We can use trend trading or support and resistance trading. And what do I mean by trend trading? Trend trading can be in this way: when you use your when you want to trade the market based on the previous occurrence of the market, that is, the market was moving from this particular level, from this level down like this. So when you say this is a trend of the market, we can see that the trend of this particular pair is what is an uptrend. So the present trend of this market is what is uptrend. So you can use this for our analysis, using it in conjunction with support and resistance. So you can use it with support and resistance. So you can use this with support and resistance. So this is a resistance and this is a support. And in our previous video, we explained what support means and also explain what resistance means. So let's say that the high from this euro JPY for the last 3 months is from here. Here is the high for the last 3 months. This is the high presently, and this is the low. Not 3 months, it's over 3 months. Let's say 4 months ago now, almost 4 or 5 months ago. So this is the highs, this is the low, this is the low. I don't know whether you are following me with what you are saying here. So here is the what is the resistance, and here is the support of this particular trade, because this place is the low, which is the support, and here is the highs of this market. So you can see that the market now is reacting based on this resistance, but maybe it's going to break this resistance, continue the uptrend, or come down for a low trend or change of direction rather. So, and I explained in our previous class that to draw a support resistance, you have to look for the highest and the lows. So this is the low and this is the highs. So for this particular view that we are seeing presently, so this is the low, this is the high of this particular market. So now, as a forex trader, we need to stick to a particular major pair and you want to trade this market. And what do I mean by a particular major pair? We have major pair of euro USD, we have euro JPY, we have euro card, we have USD card, or you have GDP USD, we have euro GBP JPY, and NZ US. So if you wish to trade a particular pair, which is, let's say, US pair, so you go for all US pair trade. So this US pair, euro JPY, this US pair, USD card, this euro pair, dollar pair, sorry, USD chef, which is Swiss francs. We have many many symbols that we can also add to our chart depending on what you want to trade. So if you are a new investor in this market, so you need to first of all understand the 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 currency pair that you want to go for. So this is because the pair are very liquid and they have stability in volatility. So they are very stable, they are very liquid, and their currency pair is stable. You cannot just jump through. You have to move with trend. They move with trend. You can't just move up anyhow. So they usually follow their trend pattern. There are another technical strategy. Some are day trading, some are string traders, some are string traders, some are scalp trader. So they use 5 minutes for your analysis and they enter the market and make their profits. So so what there are some things that need to let us know that before we start trading, you need to understand broker that give you more access to more pairs for you to trade. So it is very important that we understand that. And don't forget, forex is a very liquid market, and also is very risky. So forex trading has the potential to bring good income to you if you trade with working strategy. So if you trade with working strategy, forex trade will benefit from this trade, from this market. If you trade with a good strategy, you are going to benefit from this market. And also there is also a downside of this market. The downside is that you can lose all your investment within a twinkle of an eye if you lack money management. If you lack proper money management, it can be a disaster for you. So you can lose all your money in the market. So any trainer that did not tell you that it is possible for you to lose all your money is a fraudulent trainer or educator. So you have to run away from such people. So I cannot tell you that you cannot lose money. I have lost money in the market and also have make money from the market. So if you lack money management, you refuse to stick to your strategy, or you refuse to demonstrate your way very well before you go for a live account, that you just want to make the money easily, you can lose all your investment in this market. You can lose all your investment, you can lose all your money in this particular market. So it is very important that you understand those concepts before you venture yourself in this market. Then there are pros and cons. So you can start with as low as what I said earlier, with minimum of, some broker will say you should deposit like maybe 5,000. You can just start trading, but I would recommend that you start with minimum of 50,000 so that you can be able to enter and lead the market. But one thing is, never risk more than 5% of your trade on a particular trade. Don't risk more. Like for instance now, I want to start with 50,000 naira. So if I'm starting with 50,000, so I must not risk more than 5% of 50,000. I don't know whether you understand what I mean by 5% of your investment of your capital. 5% of 50,000. 5% of 50,000 is how much? 5% of 50,000 is 2,500. 2,500 naira. So you must not lose more than 2,500 naira per trade out of 50,000. So your trade, for instance, now you place a trade, you lost 5%. Let's say 5% of 50,000 is 2,500 naira in Nigerian currency. So minus it from let's say minus 50,000. So your account will have 47,500. Let's go and convert this 50,000 to dollar now. 50,000, the present exchange rate is let's say 900 naira. So if you are starting now, you have $55 in your account. Let's say you have $55 in your account. $55 in your account, $55 multiplied by 5%. So it means $5 multiplied by 5%. So you have $2.75. So you must not lose more than $2.75 per trade if you have $55 in your account. I don't know whether you understand what I'm saying now. You must not lose more than $2.75, that is $2.75 per trade, because if you don't manage your capital very well, you will lose all your investment. Then last, before we call it a day today, you can make can make money from the market. Likewise, you can also lose money, as I said earlier. So huge trading volume, and you can buy, you can also sell. So the market is open 24 hours in a week. You can open it from Monday to Friday, though market close on Saturday and Sunday, but the market resume by 10 p.m. on Sunday or by 11 p.m. based on the weather condition. What I mean by weather condition, the time change, either summer or a winter period. So presently the market open by 10 p.m. in the night. Then what are the risks in this market? You have so many risks. The first one is high risk with leverage. So for instance, your broker give you a leverage for you to enter a trade. If you think that because you have $55 in your account and the broker give you leverage that you can enter as many trades with that $55, if you enter more than, let's say, one trade or two trade on this $55, and you risk 5%, for instance. Now let's say now place 10 order. So $2.75 that we said earlier as 5% of 50,000, which is $55, multiplied by 10 places of order that you have placed. Now you have $27 alone that you are going to lose if the market go against you from this particular capital. So if you minus $27.5 minus $55, you have $27.5 also in your account. That means you have lost half of your capital in the market. So you have to be conservative. You have to engage yourself in proper risk management when you are trading this particular market. Then avoid bad broker. What I mean by bad broker, that they charge too much strap with that. If you want to enter a trade, your trade first of all go to like maybe 10 minus 10, immediately you enter the trade. So you should avoid such a broker. Then risk of volatility, that is volatility of the market. The market are too volatile, don't engage yourself in it if you know that you don't have huge capital to trade this market. Then the last one, which is very important as a forex trader, is emotional disorder. Emotion, or let me say emotional stress. This affects traders. It has affected me, that I lost money in this market. Because of this. So emotion can make you to lose a good trade if you not train your mind that this trade I'm going to make it. Or emotion can make you to close a winning trade prematurely. So you have to train your emotion. So as I'm wrapping up for today, because it's over almost 30 minutes now in this class, so we are going to round up now. Let me share again to you the broker that are okay as a Nigerian trader. I said it earlier that FSTM, they are a good broker in Nigeria. Opta FS also is a good broker in Nigeria. Forex is a good broker. I use both FSTM and Forex. Those are the two that I use presently as my broker. We have also SM Trading. Also, they are good broker. So as I'm wrapping up now, what are the key to avoid while trading, and most important things regarding trading? What are the things that you need to understand as a trader? Number one, learn a strategy with an edge. It is very important that you learn a strategy that work for you. Don't copy anybody's trade. Trade what you see. By the time you continue with it, you beginning to develop yourself. You begin to get those things that you need to understand in this market. So as a forex trader, it is important that you understand your own techniques that you will use to benefit you. Then employ a proper risk management. I said it earlier. So you employ a proper risk management. You don't just jump into trade. You understand what you are trading. Like for instance, now if I want to enter this particular trade that I'm seeing here now on this chart, that euro jpy is on uptrend, and presently the market is still ranging on this particular resistance. There is possibility of this market breaking the resistance, because there is already a almost break here, though the market reverse back, and there also the market has already touched our trend line. So there is possibility of this market still going up or go down. So let's use this to train ourselves this morning. So now let's go to past occurrence. Let's go to higher time frame to know what happened to this particular trade and see the direction the trade is going to go. So let's see. So you can see now that the resistance here is very strong. So the resistance here is very strong. We need to draw another resistance here. Another resistance. So there is resistance here that is very strong. You can see it from here. You can see it now. So let me draw another one here, because it has to break that place before the market will go up. This is the last one. There is the last one here. There is the last one here, and there are also equally another one here in this area also. There is another one here as where the last highest high here. There is another highest high here. So there is another highest high in that place. So let's see what could eventually happen to this particular pair. Let's see what could eventually happen. So now go to lower time frame to see those things that we have put in that place. So let's go back to daily time frame to see what is happening there. So from the lower time frame, we can see that there is possibility of the market touching this high before coming down. There's possibility of this market touching this area, which is 159.09, or come and break this line. So that's what I mean. You have to train yourself and use your strategy. Build a successful trading mindset. Build a successful trading mindset. Is very important as a forex trader. You have to build your mind as a trader, that from this market I'm going to make money. I'm not going to lose all my money in this market. So, and at the end, you are seeing yourself as a champion. Thank you for your time today. I will talk to you soon. And if you have any question, any addition, or anything to add, you can contact me on this group. And also you can also subscribe to my YouTube channel for more video, for more content from us. Thank you very much for your time. Happy trading day. Thank you.